to have invited Edward Chen, our General Manager of Asset and Commercial Center Huobi. And then we also have Adrian from Newman Capital, Managing Partner and also founder of Newman Capital. So I would like to invite Edward to introduce yourself first, let our audience know more about you.
Oh yeah, thanks. I think we should introduce. Uh, but anyway, let me go first. Yeah. I think we should introduce Adrian first. Yeah. So hello everyone. This is Edward. Yeah. I'm now heading the Asset and Commercial Center. For under this business unit, we cover a couple of stuff, including asset listing, collaborations, investment and incubation, and during the same time, we serving all the B-side clients, including all institutions, market maker, brokers, high net worth clients. So our objective is to provide all these stakeholders or partners and clients the best service and help them to solve the problem, support all the business growth and drive the revenue. Yeah, and for myself, I work in Huobi for I think almost 5 years. I think it's one of the older employee here. So we have experienced a lot of things 2018, and I think we also get a lot of achievement. So currently we know maybe Huobi experienced a lot of adjustment in the past few months, but so far everything back to the more stable and more proactive status. So we want to have more chance to communicate with all the communities and all the friends here to discuss about the future and potential collaboration opportunities. Thank you.
Thank you, Edward. Glad to talk to you. And Adrian, how are you doing?
Good.
Yeah, Adrian, please go ahead.
Hi, everyone. My name is Adrian. I'm the founder of Newman Capital. We are a prop VC firm based in Hong Kong. So we have presence in Hong Kong, Singapore, and India. And we predominantly invest in now consumer space, usually around the infrastructure around the next generation of consumer applications. So meaning that any kind of wallet, on-ramp, off-ramp, KYC, ML solution per se, we love to invest in those companies. So we start off with more investment in non-crypto companies, more private equity stuff. The names that you would have heard of, SpaceX, Epic Games, Reddit, before the NFT was even launched, we invested in those companies. Since 2020, we invested in crypto funds, 8 of them around the globe, and start to look more into direct investment since last year. So now Hong Kong and particular the Greater China region there's a lot of conversations around how crypto could evolve in this part of Asia. We are very much interested in Asia leading the next bull market, particular in crypto. So our philosophy is usually quite flexible. It could be primary market investment, it could be hedge fund strategies, trading in secondary market, it could be distressed investment, buying out protocols and restructure and sell it back into the market or industry players. As long as it make profit and help the space, we do it.
Thanks, Adrian. And this is such a very precious opportunity to learn from you two, Edward and also Adrian, about your views on the current Hong Kong crypto embracement and also the latest move of our Hong Kong government. And then let's start with Adrian, right? Because you're the founder of a venture capital. And I'm actually a little bit interested in your views towards the first step taken by the Hong Kong government to embrace crypto. What do you think about it at first glance?
Well, I think it is. Being in Hong Kong, I had glanced through the regulations from a lot of different perspectives because Hong Kong traditionally we are much slower than others in terms of the regulations. As we always know in traditional finance, there's a joke around how SEC regulate a space and how MAS is going to follow 6 months later, and SFC is always like 18 months later. There was kind of stay in traditional finance, but well, I personally do support that in some sense because particularly in crypto, it was a wild west at that time back in several years ago, and how the government could monitor the space for a while until they could have constructive regulations, and that's sort of why government is launching meaningful policies at this point in time in 2023. So I always have a strong view against Singapore's regulations at some point, but I think it's a different take or different view versus Hong Kong, in the sense that Singapore pushed regulations really fast over the past several years, and it hurt a lot of retailers from what we saw in FTX, the incidents that allows retail trading on the FTX exchange, while Hong Kong allowed professional investors only to trade crypto over the past several years. And turns out we have the bandwidth and flexibility now with the strengthened regulations to continue with the propelling crypto in Hong Kong. So that's sort of my overview on how positive I am around the Hong Kong government's regulations. And it's just more from a securities point of view, but obviously the government is pushing towards Bitcoin as currency per se, or digital Hong Kong, all this from a also currency perspective. So I'm overall really positive on what's happening.
Thanks, Adrian. I kind of agree with you. The Hong Kong government is usually a step slower than other, financial cities pushing crypto. And we just tapped into some concepts like security, allowing professional traders to trade. And we're going to tap into that later. Okay, thanks. So Edward, hey, yeah, could you give your views towards the latest Hong Kong move, embracing crypto? Do you have different opinions than Adrian?
No, to be frank, I quite agree with Adrian's opinion. I think it's quite a positive signal towards the industry, because in the past, I think everybody, if you guys are familiar with the mainland China's history, that for China used to be one of the biggest crypto market, right? And also it's China power to stimulate and support the crypto industry to grow, especially for the last two waves of the crypto period. But unfortunately, there's some regulation or some top level policy adjustment. So that's why mainland China cannot continually to support the crypto business. But for Hong Kong, I think this is a perfect opportunity for everybody. So that's why even I go back to see a lot of friends here. So a lot of mainland China industry players or potential teams, they just come to Hong Kong. They're quite excited about it. It's a very good window, a very good space and a hub, which we can let all the Thailand's or the people who has the passion wanted to build something within a Web3 world to have a space to play and to perform. So I think it's quite positive from my angle. Yeah.
Thanks, Edward. It's actually very optimistic to hear that you two both share the same opinion that it's very positive for Hong Kong to embrace crypto. And people are now talking about Hong Kong becoming the next crypto financial hub, and some people might think it's gonna surprise Singapore, and some people I think Hong Kong is usually one step slower. So Adrian, what's your view towards the possibility of Hong Kong becoming maybe the greatest crypto hub, or what do you think?
Well, I usually, because Hong Kong historically is the entry port to connect China, mainland China, and the rest of the international market. And I believe that Hong Kong will have a role as an entry port of crypto. Having said that, it means we are going to be a facilitator in the Asian regions to connect mainland China probably in the future to the international market. And probably Hong Kong will gather all the resources and talents around the city. And well, I think in terms of crypto hub, global crypto hub is probably a bit too aggressive to say at this point. But being the crypto hub in Asia, I do have a strong faith in that, because I personally travel quite a lot around Southeast Asia and visiting Taiwan and Japan, Korea. I believe Edward traveled to Korea quite a bit as well. Hong Kong has a unique advantage as in being the international face of mainland China. And we have 1.3 billion people in China versus Southeast Asia. Even though it's high growth, I personally feel there's a lot of competitions around Southeast Asia as in who is the boss there. So you go to Vietnam, you go to Thailand, everyone don't think Singapore is the boss. Everyone kind of think that they are their own boss. But Hong Kong has a very clear roadmap and its role within the Greater China region. So being that having that as an advantage is incomparable. No other market had that unique selling point. The second is also the infrastructure itself, and the capital efficiency in Hong Kong was proven as an international financial center. So that is setting a foundations for any kind of regulated infrastructure, as well as exchanges, as well as market makers, as we all going through the storm with SEC and how the US market is going to be stopped for a while, or the growth of the market is going to be stopped for a while, versus we're finding a leader in Asia. And I think setting up the regulations for the first time, as I mentioned, we have been quite slow versus other markets. But for the first time, I think Hong Kong could lead other regulators in setting, and we have already led probably in some kind of domains in crypto to set that foundations for being an Asian hub. So in summary, I think we could be the Asian hub for sure, global hub. I think it will based on a lot of factors, including luck, including investors' return, including Huobi's involvement in the space. But I have a strong faith in Hong Kong being the next big thing.
Thanks, Adrian. So, hey, Edward, Adrian thinks that Hong Kong might face competition when it comes to the global financial hub, but it might have some advantage in the Asia region. So, Edward, in your experience, you are managing several offices in different regions. So, what do you think about Hong Kong becoming the financial hub in Asia, or maybe global term?
Yeah, I think it's definitely a very great opportunity, because in the past, I think Hong Kong also suffering a lot in the past few years, right, due to a lot of policies, or a lot of incidents happen. And during the same time, I think because we usually stay in Singapore, right, so we see Singapore play a quite good style, and they quite open. They announced the first ever list for the exchanges. They have the list for license for the brokerage, for OTCs, for a lot of stuff, and they even promote their local bank like DPS to enter the crypto market, to do a lot of custody service. So they do a lot of things, and they by that quite a flexible and industry friendly policy. They acquire a lot of capitals and laborers and talent, and the companies went to Singapore. So when China banned crypto, majority of the China-based, or China-oriented company go to Singapore, just even like Huobi, right? So our headquarters currently is Singapore, including Amber AI, Amber used to be Beibao, Copper, also Bixing. A lot of Chinese-oriented company, big groups, they come to Singapore. So, but during that time, Hong Kong didn't do anything, because we are also suffering due to the COVID. So we are still solving some internal issues. But now, since everything is back to normal, the China reopened, Hong Kong has more aggressive and more, the ambitions in this part. I think definitely Hong Kong become a quite a strong candidates and a competitor for the real crypto financial hub in Asia. And if we look at other potential cities, it's really hard to compete with Hong Kong and Singapore, because both of them are real financial hub, no matter for the traditional finance world, or from the location wise, they all have all the the advantage. And there's some other cities is trying to play, like Tokyo, like Seoul, like even Sydney, or maybe Ho Chi Minh cities. There's a lot of cities they're trying to become very important power within this competition. But I think only Hong Kong and Singapore has the chance to be the winner at the end. And the interesting phenomena which we observe is we have a lot of friends and a lot of big clients who used to base in China. They went to Singapore last year, but now especially during the Chinese New Year, everybody came back to Hong Kong. So it's a very interesting angle. Everybody say, "Oh, I'm coming to Hong Kong. I'm trying to join the event. I'm trying to see something, or apply for some license, or explore some potential collaboration with the government." So it's quite a positive signal. And even for us, we Justin also announced that we are applying for the license, crypto exchange licensing in Hong Kong, and open the Huobi Hong Kong station. So yeah, so we think it has very high possibility, but really depends, the regulator, how they set up the policy and how they co-work with the the industry players and industry builders. It's not easy job, right? As Adrian just mentioned, like the FTX case, in the very beginning, Singapore is quite aggressive in this part as well, right? Even Temasek and the GIC, they invest a lot into crypto exchanges, and they bring a lot of attention and bring a lot of traffic go to the, even for their, high net worth clients from Singapore, they invest in FTX, but at the end they get a big loss, right? And which stop their aggressive behavior. They become very conservative. They be very very risk sensitivity. So that's why they say, oh, we don't promote crypto business to do any business with the retail clients. We can only cover high net worth clients or institutions, very limited stuff, so on and so forth. So the key challenge and the difficulty stuff, which from my personal angle is how regulators set up the policy and how they balance the restriction of and the control of the industry, but still support industry have very healthy growth within the area. So that's the main stuff. But if they can solve that problem quite well, I'm quite positive about the Hong Kong to be the top financial hub for crypto in Asia. Yeah.
Thanks, Edward. Actually, I would like to delve into the high-level concept you just mentioned, how exchanges are going to balance out, expanding its business and also complying with Hong Kong regulations. And could you provide further opinions regarding this issue?
Yeah, I mean, so I think Adrian also quite familiar with exchanges. You guys invest a lot of projects and also dealing with crypto exchanges in the past, right? So usually for crypto exchanges, currently we're talking about when we more highly relevant to regulators are the centralized exchanges, right? So on the market, I think around 100 to 200 centralized exchanges. Everybody has different advantages, and some of them are quite localized, like Upbit. They just stay in Korea. They focus on the Korea market, and like CoinDCX, right? WaraX, they used to stay in India. And maybe Coinbase, they will focus on US, right? But also there's a lot of global market exchanges like us, right? And other like Binance, OKX, KuCoin, Bybit. There's a lot of exchanges. We're talking about centralized exchanges. So everybody is, especially go back to 2018, everybody trying to apply for license. Everybody trying to have a more, official identification and have a better, endorsement and also the control and the trust backed by the government. Everybody trying to get that, but it's really, really difficult to get that because there's a lot of stuff to handle. And also in the past, the license or the policies too restrict, which would definitely influence the centralized exchanges revenue stream, because the centralized exchange everybody knows, right? So the main revenue stream came from the trading commission fee. All the traders, all the clients, they come to exchanges, they trade the good assets, and then we charge a very minimum fee and to just support the platform to survive, right? But if for example, the government and the regulator say, oh, sorry, hey guys, you used to, maybe for example, Binance have 400 assets, they say, oh, sorry, we can only allow 5 of them to trade. Then it's worth, and for Binance, they, for example, they have over 8,000 people, right? How are they going to survive? It's very, very hard. So that's the main challenge so far, and also that's the part I just mentioned, right? So how regulator set up the policy. So how to set up the policy? They have to fully understand the industry. They have to fully understand different participants and how their business model run. And for blockchain, there's a lot of new concept came out, DeFi, X to earn, GameFi, a lot of new space, and currently LSDs, some other concept came out, right? So the regulator, they need to be very clear about how these business model run and how they're going to regulate it to make the business still survive and have a sustainable growth. So some of the policies which a lot of regulators they used to set up is too restrict, which for example, I think everybody knows Hashkey and OSL, they already got I think number 1 and number 7 license in Hong Kong. But to be frank, you guys can just come to ask them, did you guys make the money? It's really hard. They don't make money at all because they just burn the money to keep the license. But so that's the problem. So if any centralized exchange, they if Hong Kong government they want to attract them or invite them to join this game or join this space and support industry support, I think the number one thing is they have to find a balance point, and they have to have very good understanding about the business model, how to find a proper way, how to make these players survive and support industry growth. Yeah.
Thanks, Edward. I totally got your point. At this stage, government is figuring out the business model of exchanges, and hopefully they'll find a balance between them. But let's tap into these high-level concepts later on up regarding the regulation details. So, but I want to ask Adrian, what does it mean for investment funds like your firm to think about, what about the regulations? Does it matter to investment funds? Because I think they also impose some strict regulations on professional traders. But what about investment funds? Are they the same thing?
Yeah. So the licenses or the regulations cover not just exchanges. The latest one cover exchanges, but there was previous ones that was launched by government to regulate investment funds, basically asset managers in crypto. So the disclosure is Newman, we are prop, so we don't have LPs ourselves, so we are not affected. But obviously, we are constantly looking at how the regulations impact crypto funds. So I think in Hong Kong there was already funds that were licenses to provide asset management services. And if I was not wrong, I think one of them was got by HashKey as well. So HashKey had both the exchange license and asset management license. And I think Huobi, I'm not sure, but I remember there was a Hong Kong license for Huobi, if not correct me. So, but I believe if it is overall impact for asset managers or any VCs in terms of regulations, I feel more it is about the investment thesis, as in what kind of companies you should invest in to capture this exposure. The exposure as in the Hong Kong opening up regulations for crypto. So for us, we have been constantly debating whether we should invest in this exposure, because this exposure is highly uncertain with risk. And I believe that Edward already addressed some of the points. It is difficult to be innovative at the same time being protective of the businesses, because understanding a business model is difficult. But we believe that some of the modules, which including, as I mentioned, KYC ML services, or whether it is on-ramp, off-ramp, should be crucial and elementary for the success of these infrastructures, whether it's exchanges, whether it's trading firms or not. So now I think it is really taking out these teams, and also a difficult point is to understand whether they are fully compatible with the recent regulations, right? So there's a lot of, for example, foreigners trying to do KYC ML solutions in Hong Kong, and we will probably have initial reactions whether they really know the gist out of the regulations, and do they really talk with the regulators. So we tend to, with that in mind, we tend to invest in more Hong Kong teams now if it's coming to the regulator piece exposure, because we think that with the local network they have, with the local know-how and kind of the business culture here, Hong Kong team is better to make this happen in terms of the regulation exposure. But other than that, I think it is for asset managers, there's also more opportunities to develop index funds, more dynamic strategies in trading, and that's gonna draw in talents from elsewhere.
Thanks, Adrian. Actually, I want to respond to your point that you mentioned about KYC, and after digging through the regulation documents and Hong Kong government at the SFC, and then I found out that they actually have a very high standard for doing KYC, especially they only allow professional traders to involve in crypto trading. And I wonder what your views towards this regulation, this strict regulation.
Yeah, I think offering just for professional investors was my initial reactions back to it was launched, I think 12 to 18 months ago, it was quite a disaster, to be frank, for initial reactions, because at that time I believe the market was pretty bullish relatively for compared to now, and that is basically hindering the mass adoptions in Hong Kong. But when we look back, it was probably a good decision at that time, because considering all the counterparty risks that happened over the past 12 months. But Hong Kong is has opened up the retail trading consultations, which means that at some point retail could trade crypto for the blue chips ones. Most likely, probably Bitcoin or Ether, if not the top five. So, well, crypto, as I mentioned, it is while we want to adopt mass adoptions, there's a roadblock of risk every time the market cycles change. So I believe that step-by-step approach is probably proven to be better. But you are right that when the PI, professional investors related regulations was announced, I personally was disappointed. But when you look back, I think it's good.
Okay. Yeah, I kind of, feel you about, slowing down the mass adoption by only allowing professional traders to trade. So, Edward, yeah, can you hear me, Edward? Yeah, actually, I have another question for you because we just talked with Adrian about the strict KYC issue, and also there's another thing about the Hong Kong regulation that is the prohibition of futures trading and also not allowing yield farming products to be offered on exchanges.
Yeah.
What do you think about this regulation? Is it too strict?
Yeah, I think because I used to be the founder and the CEO for the Huobi Singapore, and I led my team, to apply for the Singapore PSA license for I think almost 3 years. So we faced a similar situation. To be frankly, I think a regulator at the end of the day, they are also in the learning curve. They are not a god, right? So they know everything well. And moreover, for this industry, the most important feature is the technology is innovated and adjusted every single day. So there's a lot of stuff happen, and a lot of the new concept came out every single day. So for regulator, and I personally have a lot of regulator friends in Singapore, like a director level department head from MAS, right? So I discuss with them. It's not because they don't want to have a perfect policy. It is only because it's really hard for them to have a perfect policy, and they have to take time to study. So for them, every single time when they decide to make a policy and announce to the public, they will take fully responsibility for that. So they cannot be such aggressive and say, oh, we open for everything if they didn't, fully understand about it, and they don't know how to well control and well control the risk. If they don't know how to do that, they cannot announce it. Otherwise, if they open the window, a lot of retail clients, or maybe high net worth, even for high net worth clients, they may have not a full knowledge for this part, and if they open the window for that, they may have a lot of challenge. For example, in the 2022, due to the bear market, there's a lot of hiking issue happen on the DeFi mining, right? Yield farming, everything happen. A lot of people lose money. Even for us, we also have some risky issue during that time. So and how gonna be high net worth clients and VIP clients or a small scale of the institution who have the capability to survive if the government they don't have a proper way to protect them. So I think it's not because they don't want to have a proper or a perfect policy. It's just because they are just started. So I look at this based on a changing or progressing angle. So I think it's just a beginning. Maybe in the coming future they may come out with others. Just like PSA in Singapore in the very beginning, they say, oh, we only support like the spot trading, and then they say, oh, we start to consider the custody. And then we start to consider derivatives and the borrowing and lending service. So it's step by step from my angle. So it will take some time. But in the very beginning, it's definitely be not easy or quite restrict so that they can protect all the players and the users who enter the market.
I see. Thank you, Edward. You mentioned about risk. The government is trying to protect retail traders from the risk. You mentioned about the bear market in 2022, the DeFi collapse, which caused a lot of financial losses to retail traders, and I kind of agree that I feel that too. So what about from the standpoint of exchanges? So what will be the pace of exchanges to adopt with regards to this low pace of regulation? And if exchanges are to expand the business too quickly, will there be extra risks to bear?
Right. I mean, so every business decision maker, are facing this question, right? And because at the end of the day, business has two main objectives. One is to create a value, but on the other hand, they have to be sustainably growth, right? So we have to make sure that we can sustain growth or sustain survive. That's the number one topic for us. Otherwise, we don't even have the power and the resource to support the future dream we want to build. So I think that will be the way how that's the logic how we're gonna answer this question, right? So for the license or for the potential exchange business opportunity in Hong Kong, we definitely quite exciting about that, but we also will deeply evaluate the current policy and to see what kind of business space or what kind of business opportunity we can do under this structure, right? So if we cannot do much and it's continuously burning, then we have two ways. Either we strategically burning that because we are still positive on that policy, so we can grow and we can stay and grow with the policy and regulator together. Till the day, I mean, for example, we prepare the 3 years, budget just to build up this station and burn for that. Till the day that the policy is more, complete and more flexible and more friendly for the, the business we are operating, and then till the day we can have a chance to break even. That's one angle we can do. Similar as Upbit. In the very beginning, Upbit, when they do the business in Korea, they are not profitable at all because it's too restricted. But after that, they do a lot of adjustment. And they continuously building and well control the cost, but to the day they start to have very good performance. In 2021 they make huge money, which based on our information, right? So that's one of the strategy which we can go. On the other hand, we have another strategy is we can wait and see, right? So so for example, for Singapore license, we as I just mentioned, there are around 200 different exchanges, centralized exchanges in the world, but only few of them apply for the PSA license in Singapore. For the others, for the left exchanges, why they not apply? It's not because they don't want to apply. Maybe some of them they don't want to apply, but it's because they don't think it's the right time to apply. So for Hong Kong license, I think we'll have the similar scenario. Some of the big exchanges, they think, oh, maybe this policy is too restricted, maybe not such sustainable for our current business. So we will keep the relationship, have a good talk with the government, but just have a talk. And until the day, wait and see if the policy is more friendly, then we start to enter the space and apply for the license. I think that will be the two strategy. I think usually the centralized exchanges operator they will do. Yeah.
Thanks for sharing the strategies with us, Edward. Actually, I want to get back to the previous point mentioned by Adrian because I'm a little bit confused about the index development. What do you mean by that? Like investment funds are to facilitate the development of index funds in Hong Kong regarding crypto. Can you give us more ideas about that?
I was referring in terms of approving crypto funds from a regulator point of view. My presumption is that index funds will probably be the first batch of funds being approved. That's my personal assumptions because it is less managers' active involvement into managing that fund. So index fund also provide retails or professional investors, depends on regulators' approval, to gain exposure to a wide range of assets. Because I think the main issue in terms of for regulating an asset manager is the backdrop that not every token could be identified whether it's a security or not, and I think that is going to be a tough issue in SEC from an SEC point of view as well. As you know, I think that was the SEC chairman did mention that besides Bitcoin, everything is probably going to be securities, and from a regulator in Hong Kong or in Asia, I think everyone's trying to look at how the definitions of securities in crypto and how would it evolve over time. So being safe, I would think that offering approving an index fund, which also there's not much ETF exposure globally now for retail to buy, and probably if any retail wants to buy in exposure, they probably want to get in the top 5 or top 3 instead of buying an altcoin in the market for now. They could go on license exchange to buy that, but being a wide range of diversified exposure, I believe some of them or most of them we actually want to get in an index exposure. How would that be evolved in other kind of investment vehicles, whether it is going to be actively traded hedge funds vehicle among approved range of cryptos? I think that's going to be a next step.
I see. Thanks, Adrian. I think we've covered a lot about the Hong Kong regulation stuff. I let's move on to some other interesting things like being the founder of a investment fund. What are the latest market trends that you are paying attention to recently?
You mean not just in Hong Kong, right?
Yeah, not just in Hong Kong, but maybe you can tap into Hong Kong's investment strategies later.
Yeah, well, we look into a lot. First of all, the thesis of us is really about the next bull market wave, and we had DeFi, we have ISO in 17, 18, then we have DeFi with gaming with NFT. So none of that really, besides NFT, bring on a lot of mass adoption yet. Put it this way, I think gaming will definitely bring on a lot of traditional users with the next wave of games develop. But for us, is really to bet on how consumer journey could be as smooth as Web2 in the next bull market. And we kind of feel that is still like a 2012 Facebook time where there's going to be explosion in growth of users instead of revenue driven valuation. So with that in mind, anything that related to enhancing a consumer journey, we are interested. So now more hyped up concept around account extractions. We did invest in a portfolio recently which offer account extraction SDK for any gaming studios to create a gaming wallet, because we believe that easier to use with social recovery, with more secure type wallet is very essential for the next batch of users to come in for any games. But obviously, this SDK could be used on other type of social applications. So we also invested in a Singapore company, actually it's called Sabera. It's a subscription-based model, which allows you to subscribe for any kind of Spotify equivalent services with Bitcoin. So when consumer journey is going to be a thing, you obviously need these kind of modules to be part of the comprehensive game instead of just being an application itself, right? And other type of stuff, it could be we look at the on-ramp off-ramp, which is pretty interesting. We think the on-ramp off-ramp model now is floor is basically like MoonPay or whatever kind of equivalent. You use credit card to buy token. You are not really buying the goods itself. So you buy the tokens like USDC, then you can use the USDC to purchase NFTs, which you need an extra step in between because these companies were designed in not ICO, but the DeFi time where NFT was not a thing. So they did not believe that using credit card directly buy NFT was a thing at that time. We are looking into on-ramp, off-ramp solution, which allows you to directly use credit card to purchase any goods or services or any digital goods or services, which is a simply change in the business model for some kind of existing companies. So anything that is going to bring not directly application to bring on the mass adoptions, but indirectly bring on those Web2 users, we are definitely going to invest in those companies. But we invest in funds that also are looking into this type of exposure. We are LP of Bitcraft, Republic, Shima, some of the ecosystem fund or foundations, also constantly with sharing deal flow regarding this front.
I see. And also, I have another question regarding the recent, fancy AI narrative. And, I think you have some special insights into this narrative. Is it overhyped or is there really something in it?
Well, personally, I invested in Singularity Net when it was back into 17, 18. And the Hansa Robotics type sort of ICO pumped a lot in January time. So I was also advisor for that project. But I think AI is quite irrelevant to crypto or blockchain. But having said that, I do see projects that we are also doing due diligence on how to use AI to add on AI to something equivalent to Nansen or on-chain data analysis. But I personally don't see why it is important at this point. You could churn out any sort of decentralized solution, yes, using AI or a ChatGPT or whatever equivalent, but it is not something meant for crypto because blockchain is still now at a very nascent stage. I feel like with that computing power that AI is using is quite irrelevant for now. But at some point, probably yes. I don't know, but at least I'm not educated enough to make an investment in AI/blockchain space for now.
Thanks, Adrian. That's interesting. Actually, I took part in a tour space last Friday with some, crypto gurus talking about AI, and some guy shared his opinion about decentralized AI protocol. He said something like that. Uh, Somebody can actually gather the mining machines of Ethereum, because since Ethereum switched to proof of stake, there are a lot of abandoned mining cards, right? The GTX, the mining hardware, and they say that actually people can actually gather these mining machines and actually to decentralize it and to lend out the computing power of these machines. And they have some idea like that, and I just want to mention and see what do you think about decentralized AI computing concept. Yeah, they're actually trying to achieve something like AWS is doing. Maybe they will do a subscription model, leveraging a lot of graphic cards, and then they're gonna lend out the AI power. What do you think about it?
Well, the decentralized computing is a thing. Well, honestly, it's not part of our thesis, so I couldn't put on a lot of comments on that. But I feel like decentralized computing should have its stick in the game, because or should have its demand, obviously, because computing now is pretty centralized, and everyone there could be incentive to lend or borrow in computing power to each other. Whereas AI is part of that, I still couldn't figure it out. I probably would think about that, but for now, don't have a comment yet.
Yeah, right. Probably should do more research into this niche. It's a bit interesting. Okay, so what about your vision towards 2023 in Hong Kong? You haven't tapped into that, right?
Hong Kong. So I actually wrote a piece of article on LinkedIn and talking about that. Well, first of all, I feel like it would be there are two parts of that. The first part is whether it is Web3, really Web3 related. It's whether it's crypto related. The second part is a more on the regulated side of things, the infrastructure side of things. I'll talk about the second part first, because now I feel I personally have a strong view on how Hong Kong could be an important piece of puzzle for the CBDC launch in China, because of basically there's a lot of trial on digital Hong Kong D pilot programs, whereas in the past there was a test pilot project between Thailand and Hong Kong to test out digital Thai bar and digital Hong Kong D. How could be settling on the blockchain. So while China is has launched the CBDC, and I believe that, and with the launch of digital Hong Kong D in the future, there is a connectivity between two financial markets, meaning that at some point I feel like there could be a possibility you could buy stocks on Shenzhen Stock Exchange with digital Hong Kong D and settle in digital renminbi. Whatever ways that you could see it is a huge change or revolutions in the financial market, which we are just a piece of a broader plan for a digital currency in China. And I always have a fascinating thought around how digital Hong Kong D and overall CBDC should evolve. But now it's the question for a VC investor is how we could be involved in this journey. So I'm still figuring that out, but I have no doubts that digital Hong Kong D will be important piece, and overall CBDC for China to be the leading US in quite a lot of things that we have never imagined. So we always thought about crypto or Web3 or blockchain as an independent thing. For me, is actually a huge weapon that when you go to 2030, people look back at is the biggest revolutions of our time, of our generations. But if you're looking into Web3 and crypto specific development this year, I feel like that in June time, when the regulator starts saying about June time, that is going to be licensed exchange that retail could probably trade blue chip cryptos. I think there's going to be development around tokenizing companies' equity, and I feel like if I were a license exchange, I might tokenize my own equity and offer kind of slow growing STO market in the past, which there was not much regulations to make that happen, or pretty much regulators or the industry was pretty conservative around that. But once the license exchange wanted to tokenize their own equity, which if the regulators approve that, you think about it is a gateway to connect crypto and the financial markets, because now you might be able to use fiat to buy USDC and buy the company equity. Think about that. That is going to disrupt the whole financial market. It is providing a gateway for crypto to access traditional financial assets. So I was astonished, and I was really surprised that Hong Kong is taking a lead in that. And it was one of the very few things, I think, in 2023, which set Hong Kong apart from the rest of the market in terms of innovating Web3.
Thanks, Adrian. I think it would be interesting to hear Edward's opinion towards the idea you just mentioned about settlement of stocks and maybe financial activities between Hong Kong and mainland. What do you think about this, Edward?
Ask me, right?
Oh, yeah. About the settlement of Hong Kong CBDC, maybe linkage to mainland Chinese stocks and other financial.
To be friendly, so far I haven't collected much information here for this topic, but I think it's high possibility. And moreover, I just met there's a big chain who recently be very popular, Coflux. I just met their co-founders. They are quite positive in this area as well, and they also have the plan to release their own offshore, RMB stable coin. And they told us that the Hong Kong government, they may also have the possibility to launch their Hong Kong dollar stable coin as well. So I think that a lot of things happen in the next couple of months. If these things really happen, I think the assumption you just mentioned is very high possible to happen as well. Yeah.
Okay. Yeah. Thanks. Benz, I think you have a question for Edward and also Adrian. Yeah. Go ahead. Take the floor.
Yeah.
I think tokenizing real asset is a huge topic, and RWA was recently very popular, and I saw a lot of projects trying to do this. Basically, think about an Aave, but with real asset as collateral. I splitting the questions into two parts. First one is what is my view on the real asset recent innovation, and second part, how Hong Kong I could be related to this. The first part is, first of all, I see projects trying to do two things. The first one is stable coins, decentralized stable coins with real asset as reserve. That's the first one. And second is Aave equivalent, but with real assets collateral. And I think both of them don't work now for projects that I've been seeing, even though no matter how good the investors are. I'll explain why. The first one is decentralized stable coins with real asset as reserve. The issue is always about who is looking for the real asset. Whether say for example, MakerDAO is buying the real asset themselves, they are the asset buyers, which is fine. But if you are working with brokers or agents to purchase a real asset, there's always going to be a supply-demand dynamics, meaning that whoever want to tokenize the real assets are those who want to sell the asset, those who think the assets are actually overvalued. And demand side think that those are cheap. Those are not cheap assets, but those are asset that is going to be like 2008, a bunch of assets bundled together, rated by a rating agency as AAA, but turns out it might break the financial market. So I feel like decentralized stablecoin support by real asset is pretty risky. It's basically creating another Lehman Brothers crisis. If you think about that way, whoever want to tokenize the asset is going to put in rubbish there. So I think there's a reason from my perspective, why MakerDAO is not pursuing with all all the treasuries in real asset, kind of short-term treasury stuff. There's obviously reason for that. And the second part is, are they equivalent to use real assets collateral? It doesn't make sense for now. Real asset collaterals are short-term bond instruments, are commodities futures, or anything that is kind of liquid. Actually, even their label is illiquid asset. So because once collaterals are liquidated on Aave, whether you have an over collateralization ratio, whether you have you have whatever threshold, but once it's liquidated, because off-chain liquidation is required. So for example, if you tokenize a real estate and put it as a collateral in an Aave equivalent, you need to really liquidate the real estate to pay back the lenders. So someone have to figure out what kind of mechanisms is required in terms of real assets collateral. So I personally feel I actually have some solutions I feel like could be beneficial to the market, but so far I don't see projects able to do it. So Hong Kong particular to real asset tokenization is taking a very active role. I feel like it's taking an active role because government has announced a green bond tokenization recently. I feel like company-based tokenizations, whether it would be by the licensing exchange itself or any kind of companies approved by SFC, as I mentioned, is all going to open a gateway for crypto for fiat to buy crypto and to buy real asset. And once that happened, you could think about we have a second financial market because we have a first financial market that fiat could buy pre-IPOs, you could buy stocks, and this financial market allows the conversions between crypto and real assets such that suddenly any kind of liquid asset or illiquid asset could be cryptalized or tokenized. And it allows any companies or any people with digital currencies to purchase that with settlement time equivalent to 0. So that's something that Singapore has been trying out actually for several years. You see that MAS and SGX has been testing out tokenizing companies' equity and fixed income products to be traded on licensed exchanges. But so far, I don't think there's an uptick of activities yet because of the Singapore's market's nature. Singapore market is just not designed for an equity equivalent capital market. The Hong Kong is. So I'm pretty confident in that part. But if you asked me several years ago, I'm pretty pessimistic. Now is probably the time.
Because I'm from Singapore myself, and I do agree with you of the illiquid or the nature of Singapore stock exchange as well. So yeah, I do agree with like you mentioned about current iterations of real assets, because we look at like Mirror, for example, discounts for real assets or tokenized equities are really expensive. They're trading at a premium of maybe 5 to 10%, and it's really inefficient for on-chain users to actually buy tokenized real asset right now. Yeah. Yeah, I have nothing more questions. Johnny, I'll pass you on back to you.
Okay, thanks, Spence. And I think we're coming to the end of the session, and this very precious talk to you guys. And at the end of the session, actually, I want you guys to give maybe say something to our thousands of audience. Adrian, do you have something to say to our audience about what to pay attention to in the coming months, or what do you have to say?
Well, I think it's depending on what kind of audience they are, but I'm assuming if it is including practitioners, including some of them might be students, I think that when I went through, because I entered a space in 16, and I went through several cycles, and for every cycle, crypto has performed much better than before. And for the previous cycle where DeFi or Three Arrows broke down, FTX collapsed, and when we look at Celsius and others, I think there's a clear change in narrative, as in centralization is going to be challenged. I think centralization will retain once there's an improvement in corporate governance for centralized companies. I think Binance, Huobi, you guys, or probably several of them would definitely thrive, actually getting even much more market share from others. But the original objective of blockchain and crypto, which is being decentralized governance and a real DAO to govern this, I think would thrive or grow much more because of what happens to the market over the past 12 months. Whenever there's innovations, there was going to be damage before innovation. So ICO created damage for crowdfunding so that whether from think about when a company collect ETH in the ICO time, and they have to manage those exposure from $1,400 to $80, and that's why companies now raise in USDC. Companies like BlockFi or Celsius kind of broke down, and that's why you kind of stake your ETH in Lido. Well, I think that is the reason for every innovations, and I'm personally really excited. I would never that excited versus the previous cycles, because now I believe it's really the time to onboard Web2 users. If I told you that 2 years ago, I think I was just bullshitting with you to onboard Web2 users. I was just trying to probably raise for my funds or whatever, but now it's really the time. So if you're students, join the industry. It's exciting. If you're a practitioner, try to talk to people like Edward himself or Johnny or Ben. I think it's really the best time to develop yourself in the market.
Thank you for your wise words, Adrian. Okay, so Edward, I'm gonna pass the floor to you. Do you have any words to say to our audience?
Yeah, I think the majority of the audience came from our, Huobi communities and maybe probably trader fans and maybe, fans from Adrian and Newman Capital, right? So I think similar advice, I think, why we're so passionate about crypto and the blockchain space is because this industry is survived based on only one keyword is the innovation, continuously change, continuously innovate, and revolutionary. So I think, so that's the key part. So the only advice I would provide to everyone here is to be open-minded and always, try to explore to all kinds of new ideas, to all kinds of concept. Try it, explore it, and find the right position and your interest and your how do you say that, your objective within the space. I think definitely is big enough, and you can always find a space which can achieve your goal. Yeah, thanks.
Thanks, Edward. Thanks for wise words. Okay, so summing up, Edward and Adrian are very optimistic towards Hong Kong's latest approach to crypto, especially in terms of its regulation. But it's still in an early age, and a lot of research and also development has to be done in the coming years, maybe. So I would like to take this opportunity to thank Adrian for joining our AIM today, and also thank Edward for sharing your insightful thoughts with us. I'm also to thank Banks for co-hosting this section with me. And yeah, so thank you guys for listening to Huobi Live, and thank you for your participation. And then if you guys don't have anything to add up, I think that's the end of our AMA today. It's my pleasure to talk to you guys.
Appreciate it. Thanks for invitations, and it's a very good conversation. Thank you.
Thank you. Oh, thank you, Adrian.
Yes. Indeed, agreed. Yeah. So let's say goodbye here.
Bye bye.
Hopefully see you later. Yeah. Bye bye.